In this video, you will learn a powerful buy signal to get in early on explosive price movements like the one you see here. As you can see, a so-called cup and handle formation was created here, which often signals that the market will go significantly higher. You are now going to learn the key factors for trading with the cup and handle pattern. First of all, find a pattern that looks like a bowl. It often occurs after a significant rise where the price falls back a bit, goes up, and forms a new peak. We now have the cup in the formation. Then you patiently wait for the handle of the cup to form. The most important factor to look at is that the handle should not go too deep in relation to the bowl's height, preferably only a third. This indicates enormous potential for a strong breakout. You can choose to buy when the price breaks above the handle's top. Alternatively, wait for more confirmation by letting the breakout happen first, preferably with high volume. A stop-loss order can be placed below the handle, and you can take your profit when the price has reached the equivalent height as the cup. This often gives a risk-reward ratio of about 1 to 3. In other words, you can win 3 times as much as you risk losing. These patterns are always easy to see in retrospect after they have already formed. That's why I now want to show an example of how you can trade live. Stay and watch this live trade, where I have to wait a bit, but in the end, am rewarded for my patience. I am looking at the price of soybeans on the chart, and I think I see a cup and handle pattern here. I am looking at the daily chart, so each candlestick represents the price development for one day. And here, we have the cup and a small handle. We can see that a strong resistance level has now been broken through with a large green candlestick. This indeed looks like a perfect setup. If we measure, we see that the handle only goes down about 25% of the cup's height. And this is good because we don't want a too deep pullback if we expect an explosive breakout. We also see that the pattern forms in a larger uptrend. This makes it extra interesting to buy as we are betting that this trend will continue. But where should I take my profits if it does? If I choose to buy at the current level, I will take my profit if the price reaches the corresponding height as the cup, which will be up here around the previous peak. That looks like a bet I am willing to take. If I set my stop loss slightly below the handle and take my profit up here, my risk-reward ratio will be 3. Basically, that means that I can win 3 times as much as I can lose. So I buy now, enter my stop loss, and set a level where I want to take my profit automatically. And I'm now in the market. On the left of the chart, you can see how much I can potentially win and lose, as well as the price level at which I bought. It has now been a few weeks, and the price has moved nicely upwards. I am a bit anxious about taking the profit, but I know it is important to stick to the plan. So I am keeping the position open until the price either hits my take profit level or stop loss. Now a few more weeks have gone by, and the price has finally reached my take profit level. As you can see, this is an incredibly powerful buy signal, but as mentioned, certain criteria must be met before you enter the market. If you want to receive instant notifications on your phone for promising trading opportunities, click the link in the video description and join Nordic Traders. We have an excellent track record, and membership is completely free. Join thousands of other traders and become a member today.